Welcome everyone. In this session, we are going to learn about candlesticks. What is a candlestick? Candlesticks are basically a price chart which is used to display the opening price, closing price, its high made during the day and its low made during the day is being represented by a candlestick. We will be looking into the candlestick, how it's formed and everything. Basically, candlestick pattern originated in Japan in 1700s for tracking the price of rice by their merchants. Because what happens in earlier days, it was very much difficult for the merchant to track the price because rice was the important commodity during that time, and in Japan, trading of rice was very much preferred by the traders. So they developed a technique of charting by plotting the four things, that is open price of rice, closing price of rice, high made by the rice prices and low made by the rice prices. So they plotted the price of rice and formed a body like this, which is called as candle, and it's high and it's low, and on the basis of this they started trading. So this is how candlestick pattern gets originated. Candlestick shadows shows the day's high and the low and how they compare to open and close. We will be looking how candlestick is being formed. So let's move to a whiteboard for better understanding. So now here we are in a whiteboard. Let's understand how candles are being formed and how their color they get from the prices. Suppose, let's say there is a stock called XYZ Limited whose opening price, O means opening price is 450 rupees. Closing price is 490 rupees. In the meanwhile time, it made a high of around 510 rupees, whereas meanwhile it made a low of around 420 rupees. So what basically happens, opening price is being marked like this by a bar and the closing price is being marked by this like a bar, and then the body is being joined from top to bottom, and in the meanwhile it made a high, so a line is being drawn from the body as well as a line is being drawn from the body in the bottom side. So this is how a candle gets formed. If closing price is greater than opening price, if closing price is greater than opening price, if closing price is greater than opening price, then a green candle is formed. If closing price is greater than opening price, then a green candle is being formed. This green candle is known as bullish candle. Similarly, let's say the same stock XYZ Limited on the other day opened at somewhere around 480 rupees, closed at around 440 rupees. Meanwhile, it made a high of around 490, and meanwhile, it made a low of around 410. So, what we will do? Opening price, one bar is been drawn, closing price, a bar will be drawn, and then opening and closing price bar will be connected by the body. Similarly, a line will be drawn from the high point as well as low point, and here we got our candlestick. And since the closing price is less than opening price, the color of candle will be red. Since the price of closing is less than the price of opening, so the color of candle will be red. This candle is called bearish candle. Bearish candle. This is how a candlestick gets formed. Main concept behind this is, if a stocks opens at a certain price, let's say 300 rupees, and closes at a price of around 380 rupees, which means price is capable of moving upside. Price is capable of moving upside as well as capable of closing above its opening price. Capable of closing above its opening price, which means the candle is bullish. That is why the color of this type of candle is green. So, for formation of bullish candle, it is very much necessary and essential that closing price should be greater than opening price. Then only bullish candle will be formed. And similarly, let's say if a candle opens at 200 rupees but it failed to move upside, whereas it fell to a level of 150 rupees, which means candle or price of that stock failed to move upside and closed below its opening price. So this candle will be in red color, and this candle is called bearish candle. So for a bearish candle, closing price should be less than opening price. Then only bearish candle will be formed. We will be looking on this thing in the chart so that you will get more clarity, as well as we will be looking on all the types of the candle, because each and every candle has got its own name. On the basis of their names and on the basis of their category, we have developed a trading strategy which I will be teaching you further. So let's move on to our next slide and see how candlestick looks on the chart and how we use them. This is how a candlestick looks like. This candle is a bullish candle, whereas this candle is a bearish candle. Green candle are called bullish candle, red candle are called bearish candle. This filled part of a candle, which you see as a red colored or similarly here as a green color, this filled part are called body of the candle. Body of candle. Body of candle. This wick which you are seeing is known as shadow, upper shadow or wick. Upper shadow or wick. This lower wick which you are seeing is called a lower shadow or lower wick. lower wick. Similarly, as you can see here, what I have taught you earlier, here opening price is less than closing price. That is why a green candle is being formed. In meanwhile, it made a high of around this level and it made a low of around this level. So this is how a bullish candle forms. Similarly, here you can see this is opening price and this is closing price. Here opening price is greater than closing price. That is why red candle is being formed. In the meanwhile, it made a high of this level and made a low of this level. This is how a bullish candle and a bearish candle gets formed. So let's look into the candlestick chart and see how candles looks in the chart. This is Nifty 50 index 1-day chart. This chart is called candlestick chart. This chart is called candlestick chart, and each these bodies which you are seeing green and red are called candles, which represents opening price, closing price, high and low of the stock made during the day. For example, here as you can see, this is the opening price, this is the closing price. Since opening price is greater than closing price, color is red, which means bearish. This was the high made during the day and this was the low made during the day. Similarly, here this is the opening price, this is the closing price. Since closing price is greater than opening price, color of candle is green. Meanwhile, it made a high of this and made a low of this. These candles are known as bullish candle. Now I hope you might have understood how candles are being formed, how candles looks in the chart and what candles represents. Let's look some more examples. This is USD INR chart, daily time frame. Similarly, here as you can see, this is the opening price, this is the closing price, this is the low made during the day, and a small, very small wick. This is the high. Since opening price is greater than closing price, it's a red candle, which means it's a bearish candle. Now let's look over here. This candle, as you can see, its opening price is equal to its low because it does not have any lower wick or lower shadow, and the price was very much capable of closing at the higher level from the level which it's open. This is the closing price, and meanwhile it made a high of around this level. So as you can clearly see, opening price is less than closing price, or we can say closing price is greater than opening price. The color of candle is green, which represents bullish candle. This is how candles are being analyzed. So now I hope you might have understood everything about the candlestick formation and its analysis. We will be looking into the each and every candle pattern and its nomenclature and its naming and how we trade them. Similarly, this is Euro USD 1-day time frame chart. Here also you can see bearish candle, bearish candle. This one is bullish candle. This one is bullish candle. This one is bullish candle. This is how you can identify whether the candle is bearish and bullish. Basically, you can identify the candle whether it's bearish or bullish by the color itself. But it is very much important to understand what is the opening price, what is the closing price, what is the high it made during the day, and what is the low it made during the day. That is why I have explained you all this thing. Otherwise, you can easily spot which candle is a bullish and which candle is a bearish by simply looking into the color. But sometimes the colors also cheats. For example, what I mean to say is, we will be looking this thing further, but basically I want to say that colors sometimes cheats, because sometimes green candle also is a bearish candle. I have told you that green candle is a bullish candle and red candle is a bearish candle, but sometimes green candles are also bearish candle. So we will be looking it and discussing it further, which type of candles are bullish and which types of candle are bearish apart from their color. These all things we will be looking further. But for now sake, you understand that red color represents bearishness and the green color represents bullishness of the stock. So this was all about the introduction regarding the candlestick pattern, how candles are formed, how we analyze the candle, how candle gets its color. So I hope you might have understood the basics of candlestick very much clearly. So let's see you soon in the next session, and all the best for your trading career.